All right, so just a quick update week to week. The second convention is this week. Democrats last week, Republicans this week. You might start getting some clarity in the polls after these two conventions are behind us. The official start of the campaigns start. Get a little bit more market pricing in what it thinks, which is the best poll of all. I didn't want to get into a lot of this, and we'll kind of go in and out as to what the markets think as we get closer and closer to it. And, I touch on this in the room a little bit, but if you don't believe in the polls the way they start, I think you have to make sure that in June, which is, let's just say, Biden up here and Trump down here, you don't have to agree with the daylight that might be in between them. You don't even have to agree that Biden is winning. All you have to look at is, if that's your starting point, where is it 2 months later? If it's pulled in a little bit, it's tightening. I think the way it moves from June could be more accurate. So if you're not into agreeing with these polls because they got it so wrong 4 years ago, I think the movement from June, when the most daylight appeared between Biden and Trump, I think where we go from there could be more accurate. Now, this could actually have Biden, if there's not this much daylight between Biden and Trump, it could have Biden lower than Trump. But that's not the point. The point is, do they tighten or do they widen? And, were there moments you could put on it to get a sense of, do we have these moments again? And if so, all right, that's not good as we get closer and closer to November 3rd. In June, if you remember, it was late May, early June, two things happened. You had all this unrest from George Floyd and that, all the protests, and then what led from that. And then you had the second outbreak in Florida, Texas, Arizona, California, to name a few. That hit us in mid-June, if you remember. So you had a lot of negativity when that poll might have been taken. And so you come back and say, well, where are we going to be after this convention? Is it tighter? And then just go from there. So it's a good way to kind of get a sense of how to read polls without having to believe in whether or not they're accurate. Just go from moment to moment, tightening, widening, and then why could you put a reason on it? Without getting into details, I truly think that if Trump wins, then the markets will be happy and at some point price that in to the upside. If it looks like Biden wins, they'll at least knee-jerk price that in to the downside because of the uncertainty it has. I'd be wrong if it rallied on Biden. I'd be fine to admit that I was dead wrong, but I think that brings a lot of uncertainty, not just based on a new president, but based on there's a lot more extreme, drastic potential policies that they're talking about implementing. And so the market, just with that uncertainty, might get bearish, stay bearish. We don't know. So that's just to touch on early thought with this election and how it might affect our markets. They're going to affect them, but more and more as we get closer. Now, if you guys watched any of my videos, most of you guys are Edge Elite, which means you have access to this page on the website. Let me show it to you. I have to give myself access to it first. So if you come down here, I'll show you the website or the web page. And you hit Edge Elite. Obviously, if you're logged in and you're Edge Elite, you're going to have this course 4 is where all this content is. Now, I believe in lesson 6, there's a lot of good videos. Preview of election night 2016 possibilities. So it's in course 4, lesson 6, video number 3. Course 4, lesson 6, video 3, preview of election night 2016. I did this, I think, the day of the election because it was Tuesday coaching sessions, and that's Tuesday, November 8th. So I showed this map, and it's a really great interactive map, but I encourage you guys to go back and watch that video and how we were preparing for the markets and what they had priced in and what were some swing states and how we use this map and such. Then you could say that's a great map, and it is. And so here it is updated to 2020. And so this is pretty, you know, for sure Democrat, for sure Republican. You got to have 270 to win. Right now he's got 278. And then the swing states, if you click red, Trump gets it, and then his total goes up. If he gets Georgia, his total goes up. If he gets, that's 214 up here. North Carolina, which is close, his total goes up. Oh, I want blue. All right. And then around and around you go. They've got Wisconsin and Michigan going to Biden, and you could tell either one of these states go the other way. He dips below the 270 magic number. You've got Pennsylvania. They got the 3 states that Trump won along the top here, all going light blue. So will we get into more of this detail? Something you could play around with and look and read on why they're coming up with their colors, and then you could change them accordingly. But I think it's a cool map that you could play with and not have to watch some pundit play with his stupid interactive map. Just keep it simple, and then watch that video we did 4 years ago on how these, you know, similar states. Nobody thought that these 3 were going to go to Trump. They were looking for paths without any of these 3. And he wins Ohio by 9 points. I'm surprised he's got it wherever they had it. But just changing a couple of these will totally flips where they're at. And so if you're not familiar with what states are important as we get closer, you will be, because we'll do 1 or 2 of these sessions the day of, probably. And we'll have the room open that night through the election and the as the returns come in. Even on that night around 5 o'clock Eastern, exit polls come out. And if you listen to any documentaries, the exit polls had Trump getting smoked. So not only the polls going into Election Day 2016 were wrong, the exit polls were way off and wrong. So we'll see. At that point, we'll have a lot more information than we have now based on where polls moved, how they've come in, out, the status of this pandemic and virus, vaccine, no vaccine, all kinds of things not could happen, but will happen between now and then. So the market will have whatever it thinks priced in, and we'll know what a surprise is if there's a surprise. And then we'll know what states, you know, like Florida could start giving us a bit of a tell. I don't want to get into a lot of that detail. We don't know how much of it we'll have as we get closer, but I did want to touch on it because we're in the middle of these 2 conventions and we're getting on the other side of both of them, which after this week, both would have done their conventions and they're off to quote the races. But so start paying attention if you haven't already. The other thing I want to talk about is we can get rid of this. And this is really quick. This isn't a very long session this week. If you want the link to this session or last week's session that Dave did, let me know and I'll pop it in. I gave it to Room Guys last week. It's not on the website. There's a small glitch. I can't save changes to a particular page and up, which means you can't upload something. Either way, that'll be fixed. In the meantime, if you want last week's recording, ask me and I'll pop it in. In fact, don't ask me. I'll just pop it in to everybody who doesn't have it. It's a private link, so don't share it. Same thing with this week's link. I will share it tomorrow in the room, or email me if you want it. But and those watching this video in the future, it's probably a moot point. The website should be up and going, and you'll find it in the weekly coaching sessions section. Real quick, I wanted to talk about some election stuff, which we did, but this maze concept, and it's not a concept. It's not going to make you $1 million. Just help understand markets and make them a bit easier for you. And the point I'm trying to make is the maze. A lot of people think that there's this path that a market knows it's going to go in and through. They think that it's going to go and it's going to find it's smarter than anybody trading it, and it's going to know the path that's going to lead it to its target. And we sometimes think it'll go this way, and we're wrong, and that's a loser. Or it's going to go this way. We were right up until there, and so there are a lot of crossroads and a lot of decisions to make. But the market's price doesn't know the path like you might think. The market's price does not know that this was the right path to get to its target, right? And it just goes, and it's just a matter of time for it to do it. The market, a lot of times, will be able to go a certain way, reach a dead end, and instead of going back like you would in trying to figure out a maze, it could do things like just keep banging on a solid line until it gets through and then find its path. And so it's not, there's no set course that it's going to go. And then even if it's looking for its path, it's going to have to just bang around making wrong turns. It doesn't do that. It could do things that it otherwise wouldn't do if something didn't exist or happen. And then because it did it a little, it did it a lot. All right. What am I talking about? If a market didn't go down to here, it wouldn't have went down to here. But because something was a catalyst to push it lower right there, all of a sudden, because it went down to here, it triggered a lot of sell stops, or a lot of longs changed their mind about selling up here and said, I'll sell down here. And all of a sudden, because it went down a little, it went down a lot. Because it went in here, it got to find a path out through here that wasn't the only path that this maze gives you. We had a bit of an example of like this today in the Russell. If the Russell didn't exist as a small cap and therefore didn't go down, we wouldn't have went down a little and then went down a lot. You know what I mean? It's like you find a little bit and then a log jam is a great metaphor and example, right? If that one little log didn't move, the rest of them wouldn't have flown open. And you hit and start moving log jams that could make like this particular dead end not a dead end anymore. Something happens, you blast through it, and then you're off to the races to go to a target. I do think the market has targets and magnets that they want to go to. It's just the path could be different based on different catalysts in order flow and correlations. But there are magnets where it wants to go. Sometimes the market would do something and something changed, like the Russell or some news event. We had another example of that at 9 o'clock Central. Consumer confidence came in much lower than expected. You didn't have to be able to trade perfectly that number, sell it because it broke before it came out, like by seconds. But you didn't have to sell it, but you had to understand what could have changed when a somewhat big number missed by an above average amount. Number one, you have to know it's somewhat important. The markets are worried about consumers' confidence. Always have been, but especially nowadays. You have to know that it was expected to come out at 93, and you had to know that an 84 print, which it came out at, was below. Was not only below, but it was an above average miss. It was a pretty bearish miss. And we said that. I talked about that right at the top of the hour after it printed. But that could be like one of these moments where, you know, the market is all ready to go this way and it's almost to its upside target, going to get out, something changes. It's got to go back, and it actually goes through this wall, this wall, this wall, this wall. It comes all the way back. It was going to do something, and then something changed to make it go the other way. That just makes it easier to predict because you're not trying to say, well, this is so hard. And it's hard because everybody wants it to have a predetermined path and they think it does. So they're surprised, and that's what'll make it easier if you're not so surprised that the market isn't necessarily changing its mind. It's adjusting and adapting to all the other influences, whether it's people's long positions, short positions, new interests, old psychology, news events, an ancillary market, something lawsuit that came out against Apple, sent that stock lower, which sent the NASDAQ lower, which helped pull the ES lower. Now all stocks are guilty by association. Powell says something. A couple Fed officials say something. Trump says something. All this stuff could not only influence the temporary direction of the market, which is opportunistic and important to stay on top of, whether you catch it or not, knowing why something just happened, why we went up or why we might have went down quickly. But what's also important about understanding true movements of markets is if something happens a little bit, it could happen a lot. It creates like if it didn't go down a little, it wouldn't have went down a lot. It's not one of those things, well, of course it has to go down a little before it goes down a lot. No, the point is because it went down a little, it triggered all this psychological bulls to bears. If it didn't get into this area, it wouldn't have elected some sell stops, which elected some more. And then it had people who want to sell it there, want to sell it here. And you're dropping all these orders, right? You're dropping all these orders, you're putting more pressure on the market. If the Russell didn't bring it down a little, then all this psychology wouldn't have happened and we wouldn't have went down a lot. If the market didn't go, this way, it would have turned around and went this way. But because it went this way and found a dead end, couldn't get through it, it had to turn around. So it's like little things could change the whole kind of day. And I think people get the false sense of security because we want to think that there's a predetermined path. So all we have to do is get on that path, play that particular day that the profile calls it, and life is good. And that's why everybody would love the chart pattern of what? The trend's your friend. Trend's only your friend because the words rhyme. But everybody would like a chart pattern that allows you to always know what's next because it looks the same. Downtrend, uptrend. Even when it's a trend, you don't get that perfect looking pattern. And then we all know if you've done this long enough that trends are generally 20% or some smaller percentage of what you get in a typical year. 20% of the days might be a trend day. And then most of that trend might have exhausted itself in the overnight market. So I hope that helps. It's all about understanding something a little more each time, whether it's each time you come to these sessions or each time you watch videos or each time you listen to the room, and different things help different people at different times. So while this session and this explanation might not have helped 100% of the people in here, I guarantee it helped some. And that's what's important, is to talk about things that are relevant to what moves us and to know that All right, I get it. If you understand that, if you could just tickle some of those sell stops, bam, you could have removed the log to remove the log jam. And if the Russell didn't break, we wouldn't have broke. We wouldn't have tickled those sell stops, and we would have rallied through 32 even. Another thing that this will help you in trading is you won't take as much personal. You won't take it as personal. We do that a lot. And as soon as you take something personally, you get more mad. And then you're going to handle the situation less good. Very few people, if any, do great things when they're very emotional and mad and angry. And so the less you could take offense to what the market does, the more objective you're going to be and the better decisions you're going to put yourself in a position to make. Because you're more objective and even than angry. And it's okay to be in that flow. We talked about that a couple weeks ago. It's okay to be a little mad, right? A little fearful, but not real mad, not real fearful. You got to be in your particular flow where it's interesting enough to keep you involved, but not too interesting makes you anxious or too boring to make you complacent. So I hope this helped. Just to recap with the election stuff, the website, if you're watching this on a recording, just Google 270 to win. And for you guys in the chat now, I'll pop the link in the chat so everybody has it. That's the name of the site with the interactive map for the U.S. election on November 3rd. Number one, no, it's not November 3rd. Number two, you don't have to be a pundit or an election expert. You just got to know how I'll teach it and talk about it and how it relates to the market. And you'll actually know more than the people on TV and understand how it comes down to 4 or 5 states. And that the polls sometimes are right, sometimes are not. And I'd like people to focus on where they started in June and whatever daylight there was there and how that's changed every couple, not every week, 2 weeks, but every couple months. Break things down into 2 months. So you have June, July, you get August, September, you're on the other side of these conventions. And then understand why the polls could be wrong. But again, don't worry about if they're wrong or right. Just worry about direction, how they're relating from the last update. And I think that Real Clear Politics takes all the major polls averages and spits it out. And then the national average is one thing, and then the individual states are another. Real quick, because I can't assume everybody knows what states are important. Let me bring it back real quick. Wisconsin, if you want to write them down, Wisconsin, Michigan, Pennsylvania, Ohio, Florida, North Carolina to start with. Wisconsin, Michigan, Pennsylvania, Florida, Ohio, North Carolina. And they got Texas pink. If that goes to a Democrat, it's all over. And don't just take what they defaulted and think that they know what they're talking about too. They, I think, pull in polls to make the color. And the number are electoral votes if you're not familiar with how presidential elections work. If you get the majority votes in the state, you get 29 votes. If you get the majority of the votes in California, you get 55. And that all goes to 270, magic number. So Wisconsin, Michigan, Pennsylvania, Ohio, North Carolina, Florida. All those states, by the way, Trump won in 2016. So start familiarizing yourself, if you aren't already, with the election. If you'd like, watch that video in course number 4, lesson number 6 about the election. I think you'll like it. And we talk about that night. That was election day, November 8th, 2016. And another reminder, we'll open the room for a special at night on November the 3rd. There's a lot more information we're going to have and know. So you're in the right spot. Have a safe rest of the week. We'll see most of you tomorrow.